Hey traders, Raghee here, and in this free recap video we're going to talk about the dollar. Anytime that we have an FOMC event, a central bank event for that matter, we know that the currency of that country is going to be in play. And while there is a lot of attention on what's happening in the equities markets, quite frankly, other than what I was hoping to be a quick bounce on a much more dovish hike, the thing that we have been consistently talking about at the Simpler Futures site and also in these free videos is the fact that we are in what's known as a D-economic stage, and that D stage is contracting inflation, slower if not weakening GDP, and those things are confirmed in the data. So in that environment, we typically also see historically, this is not the first time these factors have come together, gang, and this is not the first time we've been in this economic stage of C moving into D, and that's just what I call it, A, B, C, D, but they're measured by looking at inflation, GDP, and then subsequently central bank policy. And it just kind of goes round and round in a circle, right? They just continue to affect one another. So you watch those three things and you pretty much know where an economy is heading and what kind of policy central banks will be forced to adopt. And even though the central bank in the US has not yet really admitted that inflation is falling and GDP is stagnating, they can deny it all they want. They will in fact eventually have to move to neutral and dovish central bank policy. So one of the concerns about my bullish call in the dollar that I often get asked is, hey Rog, isn't the dollar going to fall if the central bank starts talking about neutral and then a dovish take? And the reason it won't is because we are in the economic cycle that we're in, where we're going to see weaker equities markets, not just in the US, but we're already seeing many countries in bearish territory, including now the Russell and I believe the S&P as of today. So the dollar is going to continue to rally in that environment, even when, it's not if, even when the FOMC goes dovish. The reason for that is, if you think the dollar could be in trouble, or if you think the US economy is in trouble, well, look across the pond to Europe and you're going to see they're in far worse shape than we are. We continue to short France, Germany, and Italy in the Simpler Futures room via the EWQ, EWG, and EWI ETFs, which you'll notice are absolutely in downtrend, and we're going to continue to short the euro. Now, this trade is separate from these economic stages that I'm talking about, because an economic stage is not a trade. Trades happen at a price, but the expectation that I have for movement comes from this stage, comes from understanding trend, not just for the symbol, but for the overall economy. So remember, as much as I think the euro is going to end up probably pressing to 108, even 105, the setup may not be the one that takes us there yet. But for now, I am focused on the 115 short. We're also looking at pound shorts and US dollar, Canadian dollar buys. In other words, I want to buy US dollars into pullbacks, and the places that I want to buy dollars in are against the euro, against the pound, and against the Canadian dollar. All three of these are accessible through the futures, so you can look at the euro FX futures, the pound sterling futures, as well as the Canadian dollar futures, which are all short sells. And then also you can look at FXB, which is the ETF for the pound, FXE, which is the ETF for the euro, and FXC, which is the ETF for the Canadian dollar. And all three of these, powered by US dollar strength, continue to be the gift that keeps on giving. A lot of folks have been asking me, Rog, is it time to start shorting Canadian dollars? It's time to start shorting the Canada. Yes, it absolutely is. The Canadian economy, the Canadian dollar, we are just shorting the Canada. The reason being is we're seeing the housing slowdown. We're seeing what will be an accommodative central bank, so that's going to be a weaker currency. And this particular ETF is loaded with banks. And so this is definitely something we're going to continue to see movement lower in. Okay. All right. So that is today's premium I'm sorry, free recap video. In the premium video, we'll dive a little bit more into gold, bonds. We're going to talk a little bit about some other precious metals like palladium, platinum, and silver. We're also going to talk about what now. When's the next bounce going to be so we can short the broader averages? What are going to be the catalysts for that? And what are the levels that we want to short? And again, you've got my US dollar trades right here. I mean, this is exactly what I've got the Simpler Futures members in. So here in this free video, you've got the game plan and then some. So I hope it helps. And I'll see you in the next update, my friends.